The world is on edge. A war in the Middle East has erupted, and while missiles and airstrikes dominate the headlines, something far more dangerous is unfolding quietly in the shadows. For decades, one belief has remained almost unshakable. No matter the crisis, no matter the chaos, the US dollar will always be the safest place to hide. But what if that is no longer true? What if this war is not just about borders, religion, or power, but about dismantling the very foundation of America's global dominance? Welcome back to Shadows of Strategy. Today, we uncover how the Middle East war could be the trigger that undermines the US dollar's safe haven status, and why the entire global financial system may be entering uncharted waters. For generations, the dollar has been the bedrock of global stability. When crises erupted, from the oil shocks of the 1970s to the Gulf Wars, to the 2008 financial collapse, investors instinctively rushed toward US assets, Treasury bonds, dollars, and Wall Street. America was seen as the safest refuge. The logic was simple. The US had unmatched military power, a huge economy, and political stability. But what happens when that stability begins to crack? The latest Middle East conflict has done something unusual. Instead of fleeing to the dollar, investors are diversifying into gold, Chinese yuan, and even cryptocurrencies. Major oil exporters, who once recycled petrodollars back into American banks, are quietly redirecting funds into alternative systems. And central banks across the world, from Asia to the Middle East, are stockpiling gold reserves at levels not seen since the Cold War. Why? Because they fear that the dollar's power is no longer guaranteed. To understand why this war is different, we need to go step by step. First, the scale of instability. This isn't a minor skirmish. It has drawn in Israel, Iran, and threatens to engulf the entire region. Every escalation risks disrupting global oil supplies. Energy markets are in turmoil. In the past, such crises made the dollar stronger. But this time, oil producers themselves are losing faith in America's ability to act as the global stabilizer. Washington is no longer seen as the unquestioned referee. Instead, rivals like China and Russia are using this moment to promote alternatives to the dollar-based system. Second, the rise of financial warfare. The United States has used sanctions as its ultimate weapon, freezing assets of adversaries, cutting countries out of the dollar system, and weaponizing its financial networks. But now, countries are realizing they could be next. Gulf states, African nations, even longtime US partners, are quietly preparing backup systems to avoid overdependence. The fear isn't just about war. It's about survival in a world where America's financial might could be used against them at any time. Third, the emergence of multipolar finance. The war has given momentum to projects like China's cross-border interbank payment system, SIPS, Russia's SPFCs, and alternative oil trade deals bypassing the dollar. The Shanghai Cooperation Organization and BRICS states have accelerated their talks on creating a settlement currency outside of US control. A decade ago, these efforts seemed symbolic. But today, they are beginning to look like the early foundations of a rival system, and the numbers tell a story. According to recent reports, global foreign reserves in US dollars have declined from over 70% in the late 1990s to just under 58% today, the lowest in decades. Meanwhile, gold reserves among central banks surged to record highs in 2024, with China, India, Turkey, and Middle Eastern states leading the buying spree. These aren't coincidences. These are deliberate hedges against a future where the dollar may no longer dominate. But here's the critical question. Does this mean the dollar is finished? Not yet. The United States still has unmatched advantages. Its financial markets are deeper, more liquid, and more trusted than any rivals. The dollar is still used in nearly 90% of global trade transactions. And when panic strikes, old habits die hard. Yet, what the Middle East war has revealed is that the trust underpinning America's financial system is eroding. Even if the dollar remains dominant, it may no longer be unchallenged. Think of it like a fortress. For decades, the dollar stood tall, with walls too strong to breach. But now, cracks are appearing in the foundation. Each crisis, whether it's sanctions on Russia, oil trade shifts to Yuan, or Middle Eastern instability, widens those cracks. Alone, they may not topple the fortress, but together they signal a dangerous trend. The fortress is no longer invincible. The suspense now lies in how the U.S. responds. Will Washington double down on its dominance, using even harsher sanctions and military power to maintain control? Or will it adapt to the new reality, negotiating with rivals to share influence in a multipolar financial world? One path risks accelerating decline by pushing partners away. The other risks diluting U.S. power by accepting competition. Either way, the illusion of absolute financial dominance is fading. And what about ordinary people? For citizens across the globe, the end of unquestioned dollar supremacy could mean higher volatility, unpredictable currency swings, and financial shocks spreading faster than ever before. For Americans, it could mean borrowing costs rising, inflation pressures intensifying, and the U.S. government's ability to finance its massive debt being tested in ways unseen since World War II. So, as we watch missiles strike across the Middle East, we must remember, the real battlefield may not only be in the desert or the skies above. It may also be in the banks, the markets, and the digital currencies shaping tomorrow's world order. The war has made one thing clear. The age of unchallenged dollar dominance is nearing its endgame. The question is not whether cracks exist, but how fast they will spread. This is Shadows of Strategy, and the world's most powerful currency may be facing its most powerful test. Stay alert, because the future of global finance may no longer be written in dollars alone.